Welcome to Plus TV. Today, Mark Enman is with me. He is the head of global trading within the hedge fund research team at Enman's multi-manager business. Mark, thank you for joining me today. And can you please give us a background into your role at Enman?
So the multi-manager business has approximately $14 billion under management. I think that puts us in the top 10 in the space. Enman, as a alternatives platform, has $71 billion, split between AHL, GLG, the multi-manager business. My role is hedge fund research. So we divvy up the world in three distinct silos: equity long short being one, relative value or arb and credit being the second, and the third is what we call global trading, which is the more actively traded strategies such as discretionary macro, macro emerging markets, so distinct from emerging market long short, commodities, and systematic or CTAs.
Mark, what was your background before you joined Enman?
Before going into the fund of funds business, I spent 21 years trading and running trading businesses. After 21 years, I had really had enough of trading. I guess after 20 years, it was time to try something else. I tried to think of how could I apply what I'd learned up till now and still be actively involved in the markets. And a few people I know had been involved in the fund of funds business and research, and I thought I could make the transition.
As a former trader yourself, how did those experiences lead to your deep interest in research and informing investment decisions?
When I left trading after 21 years, or wanted to leave trading, I really wanted to find something where I would be able to use my background, all the things that I picked up over those years, and apply it to a new role. I didn't want to segue to something completely different. Another thing that was very appealing is I get to meet with some of the brightest minds in the investment community and speak with them, on a monthly, if not weekly basis. And, to be able to discuss markets, what they perceive as the drivers of performance in their funds, and to really get the anecdotal information that sometimes I wished I had on the sell side. It's just been very fascinating for me, so I've enjoyed it a lot. I guess what's most important for Enman's investors really is what can my background bring to the table. And I just want to say it's not just my background, but Enman as a whole has made it their theme within hedge fund research to bring people from a wide range of background, but largely from somebody who's got capital markets experience, whether it's trading or working in institutional sales or portfolio management. All of my team would have a very deep market network that allows us to pinpoint very quickly, what a potential manager's background is, where they stumbled, where they did well, a quality opinion about an investment opportunity. So, I think that's something that unique that a market participant can bring. Everybody looks at the numbers, the performance numbers, but the quantitative component to a manager assessment really is one part. There really is a qualitative assessment, and that's a gut check. So again, having worked in a dealing room for 21 years, having been hiring traders since 1993, that kind of gut check says, I've been doing this before, I can do this now to the benefit of Enman's investors. So, that's a very large component to what we do and what I hope my team can bring to the table. To be able to relate to a hedge fund manager, that is to say, to have walked in their shoes, if you will. And that implies what it means to take risk, what it means to lose money, the difficulties of certain markets, having lived through both good and bad market cycles. For me to be able to relate to when dollar yen went from 134 to 112 in 2 days in September of 1998, that's something that not many people, I think, can talk about. So, to be able to relate to the managers, I think, leads to the next thing that's important, and that's respect.
There are several seismic events taking place in the world markets right now. With your 15 to 20 years of experience in global macro, what are you seeing in the markets, and how are you positioning accordingly?
We've actually been modifying our investments in the approved list of managers really from the minute I arrived in August of 2008. So you think 3 weeks after I arrived, Lehman went bust, and then there was the rest of the turmoil in 2008. We quickly started to move the portfolio towards more trading-oriented managers. So what I mean by that is managers who have medium to longer term views, but trade the path of prices every day, and will trade pragmatically so as to try and maximize return. It's not enough to say in 6 months' time the dollar is going to be here or bonds are going to be there and just put on the positions and walk away. You need to trade it every day. It's the path of prices that leads to the best possible performance. So we've been reorienting the portfolio such that we have more pragmatic trading-oriented managers, if that makes sense. The second component is when we think about the markets and what our view of the markets are, it's not the role of hedge fund research to, say, pick managers that are bullish equities, for example, and provide them to portfolio managers. My job is to provide building blocks to allow portfolio managers to choose those exposures that they would require for the particular mandate that they have. Now, that can be a long-oriented EM equity manager. That can be a discretionary macro guy that has a very negative view of the world and has constructed a portfolio with very specific risks to them that portfolio manager thinks would be most appropriate for a mandate. And so my job is to find those building blocks that really allow portfolio managers to construct the best portfolios given certain strategies.
How do you view managers who are on your approved list and other potential managers, given the opportunity sets you see?
I think the biggest concern right now has to do with the market environment. We've discussed the difficulty in 2011. And one of the things we've noticed is the difficulty in moving around large portfolios in very choppy and volatile markets. And so we've really started to ask ourselves, should we be moving part of our investment portfolio towards smaller, perhaps less experienced managers, but ones that are, by their size, the nature of their size of their portfolio, better able to take advantage of opportunities versus some of the hedge fund managers that have larger AUM and have been around for perhaps for longer and seen more, maybe more experienced, and trying to compare and contrast those opportunity sets. We have no cut and dry formula as a way of figuring this out, but certainly something on our mind. Another thing would be finding appropriate emerging markets exposure. So for example, in Asia, it's quite hard to find fixed income and foreign exchange exposure, given the sheer number of equity long short, Asian equity long short managers, but to find really good Asian fixed income and FX guys, we've done a lot of work around that. The same thing can hold true for Latin America or elsewhere. So very focused on that as a piece. But overall pleased with the way our approved list stands right now. And but always asking the rhetorical question is, how can we make it better?
How do you see the future market environment playing out, and how will man take advantage?
One of the best opportunities we're seeing is in the commodities space. If you can construct a portfolio of investments across different sub-strategies and really find niche managers in individual spaces, so ags or industrial metals or energy RV or something of that nature, it really offers a unique investment vehicle within the commodity space when so much is dedicated long-only money. We've been involved in the space since 2002, and even though for everybody in the last couple of months, given the retracement in commodity prices and the volatility associated with many of the other market events we've already touched on, we still feel commodities offers a tremendous opportunity going forward. I think man's in a terrific spot right now. 1,600 people, businesses across the firm that are very complementary, global footprint, in a very good position across a variety of spaces within alternatives. Within the multi-manager business, I think we excel on the managed account platform. This is coming back to something that I talked about before, and partly my role is finding the best building blocks for a variety, a suite of portfolios that we would partner with investors to do the best we can. So again, it falls on me to make sure that our managed account platform offers these unique and diversifying building blocks for our investors.